Hey everybody, it's Thursday, March 25th, 2021. And we have a lot of news coming out of the auto industry, and it's not good unless you're a car salesman or someone on commission, because car prices are rising and there's something big that's happening that's likely going to make prices go up even more. And we're going to talk about it here. We're going to talk about the prices and what we may be expecting this year in 2021 in the car industry. Now, first, let's go back to last year when everybody thought prices were going to crash. So many people were losing their jobs. And on this channel, we said, not so fast, not so fast. These markets, they can be propped up. They can be manipulated. Banks can be fed endless liquidity. Therefore, they can continue to loan out money. If people stop making their payments to the banks, it doesn't matter. Why? Because we have an infinite money, fiat money, fake money, banking system. So technically, even if 100% of customers defaulted on their loans, I know this sounds crazy, but this is the truth. If 100% of customers defaulted on their loans, banks could still loan out money. Why? Because they conjure it up. They create it out of thin air into existence via debt, via loans. That's not real money. So you could have 100% of the people with no jobs. The banks can still loan out money. Even if everyone stops paying it back, doesn't matter. They can still loan out money. Now, will it get to that extreme? I don't think so, but that's just an example of how propped up, how manipulated things are in this economy. It sounds crazy, but this is the truth. Just look up fiat currency to maybe some new people on the channel that aren't familiar with that. All right, but how is this affecting car prices? Well, car prices are rising, and now with the stimulus checks being mailed out, there's talk of even bigger rises, bigger increases in car prices. And last year, nationally, car prices went up 17%, and that's for used cars. And that was just within a 7-month span last year. In this article out of WAPO, what used car tell us about the risk of too much inflation hitting the economy. So far, we're still looking at more inflation and not deflation. Rising prices, rising cost of living. So what does that mean? More loans, more debt. The banks have to be propped up even to larger levels. And used car prices are skyrocketing. According to Edmunds.com, the average price of a used car up to now $23,000. Now this looks at a different time frame, so they're looking at 14% because that is a year-over-year number. But the bottom line is prices are rising. The stimulus checks are only going to add fuel to the fire where people go out and spend money that they really didn't earn. But it's similar to loans. Anytime you have banks loaning out money and loose lending standards, same thing with stimulus checks. People have money to throw at the product or the item that they're buying that they normally would not have. It's a loan. Whether it's a loan or stimulus check, it's the same effect. You're going to see prices bid up. Price inflation, higher prices. That's higher prices for you and me. So imagine the person that doesn't want to take on debt and they want to save up cash to buy a new car, and they look and see the same car that they wanted to buy last year is now $3,000 higher. So now the savings that they accumulated doesn't keep up with it because now it's even higher. Why? Because all these people spending money that they don't have. It's the fiat money system that's creating endless increasing prices. Now, until banks pull back on the lending, or if stimulus checks are ceased, which I doubt is going to happen. I think they're going to go to more frequent checks and UBI. But if that were to happen, if stimulus checks were ceased and stopped and bank lending were to stop, then you would see deflation and crashing prices. But I don't think we're going to see that happening, maybe not in our lifetimes. I don't know, unless something gets thrown into the gears of this monetary system that no one sees, maybe some sort of black swan event, some other situation that could arise that no one's really expecting. Many people are pointing to a massive outage, a power outage that could definitely throw a monkey wrench in the system, where nationwide blackouts, things like that, or just a glitch in the gears in the digital world there that also throw the banking system into chaos. That could also cause deflation and chaos. But until then, until something happens to wreck this system, you're going to continue to see rising prices. All right, so be very careful. Now, something else is happening to add even more fuel to the fire, and I know this sounds crazy, but take a look at this. Now we have a chip shortage. The chips that go in vehicles, global auto plants now idle as chip supplies dry up. So this is going to add, again, more fuel to the fire. We're going to have less vehicles being manufactured, more money being thrown out there, being handed out to people to go and spend it and to go and buy these cars. And guess what? Prices are going to rise. People are going to be bidding up the prices of cars. Combine that with less cars being manufactured, you're going to have more of a supply crunch, more people with more money, throwing money at less supply. That is a rising price situation right there. From this article, many of the world's biggest automakers are suspending operations at their factories in Asia, Europe, and in North America, including the US, due to a persistent shortage of semiconductors that was exacerbated by a fire at a key chip producing plant over the weekend. Ford, Toyota, VW, Honda are amongst those affected by the problem with the supply of semiconductors, which are used in vehicles to manage and monitor everything from engine and driving performance to air conditioning and entertainment systems. An analyst over at Bloomberg said the following, quote, "Production is really vulnerable right now. Any kind of abnormal occurrence causes parts to run out." End of his quote. So folks, that's going to be, sad to say, more rising prices. I know a lot of people out there are wanting prices to come down, and if free markets were allowed to operate, that would fix this whole mess. You see, no one would need stimulus checks, unemployment benefits if there was a free market. Prices would adjust to what people actually had to spend, not how much they can borrow, not money conjured out of thin air and stimulus checks or whatever other kind of handouts are given out to people. Right? If we didn't have all these handouts, you wouldn't see this problem. Prices would match what the money that people had to actually pay, and that would fix the problem. Is that going to happen? Now, I still think something's going to happen to change this entire ballgame. Something that flies out of left field, called a black swan event, an unseen event. In fact, I know something's going to happen. Now, the timing is what we always have to guess at, right? Because no one can predict these things, but we do know there's always something that deflates the bubble, that changes the boom to a bear market, the bull to the bear market, the boom to the bust, so to speak. Interest rates are still low. People are borrowing more than ever. 72-month and 84-month loans now are becoming the norm, the most common. All right, now we had joked in past episodes when we talked about car prices about maybe getting a 10-year loan on cars, which sounds crazy, but look where we're at now. 84-month loans are basically 7 years. So depending on the model of car that you buy, by the time the 7th year gets there and you're paid off, the car, you're lucky if it's running. Even if you took care of it, some models probably won't last beyond 100,000 miles. Even rental car prices are being affected. Here's an article right here, CNN, $300 a day for a Kia Rio, why rental car prices have gone insane. Something that had a big effect on this, a lot of rental car agencies sold off parts of their fleet because they didn't know how long this downturn was going to last, how long travel was going to be shut down. So now you have some reopenings happening in a big part of the country, and now you have some of these agencies with a lower supply of cars than they need to handle the new the business that's reemerging now. So it's pretty wacky out there, folks. Everything's upside down, inside out, left is right, right is left, up is down. Keep your wits about you in this market, in this economy. It's absolutely insane. What's going to happen if the stimulus is pulled back? You're talking about Mad Max, deflation, crash, desperate people, millions of starving people. But until then, it's also not going to be good either because we have this massive inflation and rising prices. So you let me know what you think about this. Car shortage, chip industry, slowing down the industry with the chip shortage, and lending, liquidity, stimulus checks like never before, rising prices. Everybody, thanks for watching this report. Stay well, stay safe, stay prepared. Bye for now. Peace.